Hi everyone, good day. You are welcome back to my channel. So today's update is going to be more on gold. We are looking at gold hitting it all-time high and trading at the all-time highest prices that it ever been at. So for this month, we could see that gold is trading to its ultimate high. Let's go down to our smaller time frame, and then we could see that just in the past hour, it hit its all-time high. So what has accounted for this, and what has been happening on the market? What would have you done if you had seen some form of entry on the market? Would you have easily joined the market? And how and where would you have also um, entered the market? Let's go down to our monthly time frame and break down the chart for ourselves. So you could see from the chart that right all the way from this point, we saw the market rising from this side all the way to this high. We from this point we could have market having structures that shows us that the market was riding higher. Before this low was market traded from this high to this low, where we can have market forming lower highs. Okay, but apparently from this side we had a shift in structure right in here. Okay, and then the market made that U-turn, and then it began going up higher. Okay, so where do we see a very a good entry, and then we see we'll join the market? So for instance, here we had a U-turn right in here. The market traded above this high in here, and then it started going higher. So market formed this high. After it broke the structure, what did we have? Then we had a market retracing into this fair value gap right below in here. Let me indicate that for you to see. So inside in here was this fair value gap. Okay, let me put this aside. Right in here was this fair value gap that market actually traded into, and then we saw the reversal. So coupled with this fair value gap is the other block we have right in here. Okay, you could see this this bearish candle indicating here as the bearish order, the bullish order block. Okay, so when we have a shift in structure coupled with fair value gap, and then another block, we have a very good point of call. So right in here was where we had the reversal happening, where we could join the market. So on the monthly, price retraced into this fair value gap into another block in here, and then we saw the reversal back up. So when you look at the chart well, you could see that right as and when price retraced in here, it traded back up. Now when price traded back up all the way this way, all the way to this high, it retraced back again. Why on the normal with price retrace back again? Because there was some form of engineered liquidity resting below that point where price needed to automatically come down to sweep, and which is this relative equal lows. Okay, coupled with the fact that there is a tiny incomplete fair value gap right in here. Okay, there was a tiny incomplete fair value gap right in here that price needed to fully rebalance, and then it carries it along. So this is the tiny fair value gap that was not complete. Okay, let me edit this. All right, so there was a tiny fair value gap in here that wasn't complete. Let me put this a little bit upwards. So this is the fair value gap that wasn't complete, that price had to trade back into and rebalance the market right in here. Okay, because we have a relative equal high. That is the high form from this particular, let me take this off, the high form from this particular candle right in here, the low form from this particular candle right in here, and then the other low right in here as well. Okay, so their lows they are both swing lows, and they are relative equal lows. Price had to dig deeper into that area and then close in fully on the remaining of the fair value gap right in here. So you could see that price has fully rebalanced, and then we continued our surge higher. Okay, so price traded from this point all the way to this high. Let me quickly get this thing done for you. Okay, so from this low all the way to this high. Okay, so if we look at this low in here and then we look at this high, the nearest low that would have been formed would be this low. So we regard this low as the major swing low. Okay, that's a major swing low. We can have this high in here as another major swing high. After this high right in here, this is the next swing high. Okay, let me try and expand my chart so that you get the picture well. This is the next high that we have after this high has been formed. Okay, after this high has been formed, the next swing high is this particular high right in here, and then the next low that was formed is right in here, and then it swings up all the way into this side. Okay, so we have a market forming something like this, and then we have this, and then we have this. Okay, so these are the major swings that you are seeing right in here. All right, these are the major swings that you are seeing right in here. All right, now after these major swings, what happened? So let me try and get rid of all these lines that I've indicated for you to identify the swing that we were in a bullish market structure on the monthly with gold. And right in here, after this swing, what happened? We had some period of consolidation. All right, and what was the period? And the period of consolidation happened right in here. Okay, so we had this form of consolidation. The market consolidated right inside this area. We had a couple of period that the market consolidated. Okay, so price was accumulating more orders right in here, and after price accumulated more orders right in here, what did the market do? So the market traded below this consolidation. You could see clearly how we have this relative equal lows in here. Okay, this relative equal lows, and price came to sweep the liquidity, the sell side liquidity resting below these lows, and then it engineered the liquidity up higher. And you should know that is a common thing that usually happens when we have market accumulating orders. Okay, when we have more accumulation, price usually wants to sweep the lows and then sweep the highs, usually of the accumulation, because there are more buy orders resting above the accumulation and then sell orders resting below the accumulation. So market, it usually does that is a manipulation that the market does to get more liquidity, to rally towards a particular direction. So then it happens right in here. The market sweeps the low in here and then it rallies up higher. So now when we look at let me try and point out as well for you to see. When you look at this, you could clearly see that these lows are not the major lows. Okay, so now this let me put the line in here. So these lows are not the major lows that the market actually formed right in here. Okay, so now the actual low becomes this low. Okay, the actual low becomes this low. So the market moves from this high to this low. So from this high to this low. Okay, and then what was the next move that the market did? The market went up higher above these highs. From which point? Let me just put my fib for you to see. Sorry, what happened to my chart? Okay, the next high that the market formed was right in here. So we have a move from this low all the way to, watch it, to this high. Why? Because this is the highest point after this. Okay, then the market does a very small move right in here, a very tiny move right in here, and it forms another tiny low in here, and then automatically we have that serious expansion higher. Okay, now if you were in the market how would you have identified some of these things? Now I want to take you through a few things that I've learned from my mentor that will guide you right after accumulation. Some of the things you can see to identify that, okay, so this is the order flow, and where can you also join the market beautifully. When we broke higher after this point, when we broke above these when we broke above, let me try and put a line in here for you to see what I'm talking about. When we broke above this high, okay, when we broke above this actual high, it was with this particular candle. And then watch, when we broke above it, look at this bearish candle right in here that was formed just the month after we broke the high. It was an inside day bar, which means that when we look at this candle in here, neither the low of it nor the high of the candle was able to go above. The high didn't go above the previous month's candle's high, neither did the low go below the previous month's candle's low. Okay, then it's regarded as an inside day bar, and usually what it does is that this engineers more liquidity for price to rally up higher. And you could see a month, and then the subsequent month after, you could see how we had a very strong bullish movement up to the upside. Okay, now let me put a line in here for you to see that what I'm trying to talk about. Now you go down to the weekly time frame. Let's look at the weekly time frame. You could see how price, when price, this is the line that I've indicated in here. You see, that was the end of the month that actually did that inside day bar. And you could see how we had some form of accumulate consolidation right in here with regards to the weekly time frame. You could see how price was more it sounded that it was more like reluctant, although it was weakened down, and then it did the rally up higher. See, so that is a clear picture, especially when you see it on the monthly time frame. So you come down to your daily time frame, weekly time frame, to see how best you can frame trades right in there. So now let's go back to where we had that form of structure. Now we had a lot of accumulation right in here. Okay, we had a lot of accumulation on a daily time frame. We had a lot of accumulation right in here, and right after the accumulation, what do we see? We see price dip below this. And what did it do? As it was dipping below this accumulation, we knew that there was a fair value gap right in here that wasn't fully rebalanced. Look at it. You could see that there's a remainder of this fair value gap even whilst we had the market doing this accumulation right in here. Okay, let me try and change the color of this. All right, okay, this is so deep, but then I just want to use it for an example. Right as and when price traded and from all this form of accumulation, yes, the fair value gap was not fully rebalanced. So you notice that when they had a dip, it rebalanced fully the fair value gap. Not just rebalancing it, all the sell side liquidity resting below this accumulation was also swept, and it gives a clear telltale sign that we are in for a kill. So when you're on the daily time frame, I always say that before you can see how price does the reversal, look at it from the hourly time frame. So let's go down to our 1 hour time frame. It's going to be a very insightful information that you're going to get here. Okay, I know you're going to go a little bit far, but let's still stick with it. We are here. Okay, we are here. Beautifully, you could see how price did a reversal right in here. You see, when price dipped deeper into the remainder of the fair value gap, look at how price did the reversal right in here. We had this swing. We could see how market was doing a bearish market structure in here, and then suddenly we have a shift in market structure right here. You know, we had this high, okay, we had this low, we had the market coming up to form this high in here to inform the lower low. All right, and then what do we see? We have a market rallying all the way up, breaking the structure that we had in here. Now we have a retracement where into a fair value gap right in here on the hourly time frame, and this would have been your killer entry trade. You know, so you enter right in here, and where does market take us to? Deep into the skies. Okay, and market never comes back again. And you could see how on the let me take off this from the chart. You could see how on the chart, on the weekly, let me go down to the monthly again, how on the monthly, after this inside day bar, we had that beautiful trade happening right in here for us to enjoy the ride up. And so the market is currently trading, gold is currently trading its all-time high. So I believe that these are some of the ways that you can really identify the market's movement and also jump into the trades. I hope this tutorial helped. If it did, give me a thumbs up, give me a like. I'll catch you in the next video. See you all.